Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Thursday, September 3rd, 2015. Well, folks, I'm going to cover today three stocks that I think are going to do monumentally well next week. Major upside. First one's going to be U.S. Steel. Notice the bullish consolidation pattern off this low pivot. And again, very simply, I mean, look at the stock. It's been oversold for long periods of time. Big move up here, then a retrace. This is all bullish consolidation. I expect upside next week to about $18.50. That's a beautiful move of over 10%. Actually close to 15%. Now you might say, well, why do you expect to move up based off more than just the pattern? Well, obviously the pattern speaks for itself, but the bottom line is I expect a Chinese stock market rally. China stock market rally. Now you're going to hear, and you already heard today and yesterday in the media, that China probably was going to get crushed again. That's what everyone's anticipating. I see it differently. All right, if you look at just a couple nights ago, not last night, but the night before, the Shanghai index reversed off lows and did not closed negative on the day, basically closed flat. In addition, remember the Shanghai index hit about 2,800, bounced back to about 3,300, then pulled back to about 3,000, and then reversed last or 2 nights ago. Basically, what I'm saying is you're making higher lows. You can see that clearly by the FXI right here. Look at this. Here's your pivot low bounce, and look at this retrace, a higher low. So bullish signs are mounting. That reversal also a couple nights ago was very key. In addition, it's my interpretation that the Chinese government will not let the market fall Sunday night going into Monday because it's coming off of a 2-day holiday. It does not want the markets to crash down. It wants to support them, and I believe it will support them. So I would look for as much as a 3 to 5% rally in the Shanghai Sunday night. The U.S. markets will be closed on Monday, so therefore Tuesday night I expect more rally in the Shanghai. Monday night more rally in the Shanghai, and then Tuesday the U.S. markets open, and you should see further upside, especially on names like FXI, which obviously is the tracking ETF. U.S. Steel is one of my favorites. Another favorite of mine is Wynn Resorts. You might say, well, what does Wynn Resorts have to do with China? Well, if the Chinese market does well, Macau gaming will do much better, and that will be a positive for Wynn. One of the reasons why I think Wynn hasn't bounced back very much and is just continuing to sell off. And look at this chart on Wynn. I mean, it's just one of the ugliest charts you ever see. But this chart will see upside because as soon as China gets footing, people are going to say, oh, Macau's going to do better. Therefore, Wynn Resorts does better. All right, and all the gaming plays out there should do better if that does happen. And many are bouncing today as well. So, I mean, these names, guys, are beauties. And one of my favorites continues to be Lumber Liquidators. This is just a beauty on the chart. I told you guys about this yesterday via Twitter and a post. Bullish consolidation pattern. It's already starting to break up about 2% today. And this is just one of those patterns you have to love. The performance has been spectacular in this weak market for this Lumber Liquidators. Basically, since the beginning of August, when the markets have tanked, this has actually gone up or sideways. This is a beautiful bull flag over the 20 MA. I'm expecting a move to the gap fill here at 18 and then to $25. These three stocks are my favorites going into next week. Be ready to rock and roll, guys. This is what it all comes down to. The money keeps on flowing from members here. You get trade alerts in the Research Center, options trades in the options alerts, and day trades in the intraday stock chat. Come join us at InTheMoneyStocks.com and profit like always. Take care.